So today we're going to be going over what is a major and a minor high. What are they? Why it's important, why you need to define it for your own strategy. This is going to be specifically going over my Starlight strategy, so my mentorees, listen up. But it is super interesting when you throw things in like order blocks, liquidity grab, market structure for stop loss placements, and we'll be talking about all of that. Volatility, volume, it's all going to be coming into here. So if you haven't done it for your strategy, you've never heard of this before, it is something to think about. So first things first, what is the difference between a major and a minor low? You might not have heard of this term. In fact, a lot of people might just be going, oh, what is that? So realistically, what it is me just talking a whole lot of garbage. That's what it is. But it makes sense when you think about it. Not all highs and lows are created equally. Let's take this for example. Are we going to say that this area here, or this low, has as much impact on the market, if we call it a low, as this one over here? Are we going to say that this high right here has as much impact, even though it's only traveled from here to here, as this one over here? If we are saying they're all of equal impact, of equal importance, then great. Every time an order block forms, then all order blocks are essentially equal. Then you can liquidity grab at basically any point, which is true, but it's just as likely to happen at small highs as major highs. That I can put my stop loss wherever I want on any market structure because it's all created equal, right? It's not. If we have a major high, and you imagine it this way, we're getting volume and orders, and more people are hopping in, and more people hopping in, more people are hopping in. Got that volatility behind us. And then it stops. And it just turns around. Not too long after hitting quite a lot of volatility coming in here, quite a lot of orders. And it just comes up here and it goes, no. And it turns around. Now to me, what does that signal? It signals that either a lot of people have hopped out in this area here, or maybe the banks have also hopped into this area. If I can get a good thing through here. The banks have also hopped into this area and put some sell orders in here. Maybe this is the formation of an order block. Because if you think you're driving down a highway at 100 kilometers, you're getting all these people hopping in, and your volume is going up and up and up, and you're getting all this volatility, and all of a sudden it just goes, I want to turn around. Interesting. What can make a market do that? I don't think that when I look at something here, because it's a lot smaller. And if there was an order block there, well, we just absolutely nailed through that area with really no effort whatsoever. And you can see there's nothing here. There's nothing here at any point to say, yeah, there was an order block there. We zoom out. Look at these two highs. Funnily enough, in this place here. Now it's starting to make it look like there is an order block, that there's a set of orders, sell orders in this area that's pushing and forcing the market down. This is much more evident, and it happens far more often with major highs because it is a place of market structure. It is a signal that I am here and I'm pretty solid, and if you want to put a stop loss above me, you can, but it could also show me that if we've got an order block here, I might want a liquidity grab into it. So maybe my stop loss doesn't go here, it goes up above here. Who knows, right? But that's what major highs can do, and lows. Whereas these small ones, they just don't have much volume, we don't have much volatility, so why would I base really anything off of them? So then the question comes, well, what forms a major high? What are the rules for a major high? And this is where a mechanical strategy comes in, is so important. You've got to know everything. You don't know what a major high and a major low is, then if you say, oh, you put it the last high and the last low. Major, minor. I would never tell my students to put their stop loss here, because there's a major high right here. Why would I tell them to do it here? And I also know that there's a order block here. So if there's an order block, I'm not going to tell them to put it here. I'm going to tell them to do it higher. Because that's what's happened over here multiple times. So it's this sort of thing when you start to get into it, you go, oh, okay, understanding the market structure and having these definitions of what is and what isn't can therefore save me. It can give me a little bit of information about what's happening in the market, and it can provide a good area for a stop loss and or an entry. If I wanted to sell in here, this is a great area for me to sell into. My stop loss can go above the order block. It's telling me market structure, it's telling me a story and telling me a signal. This is something that we would have hopped into before, and look, the stop loss would have actually been a whole lot smaller, probably somewhere around this area here, maybe we're at 1 to 2, something like that, right? That's what we can do. So in terms of stop losses, how we define it in Forex is 15 pips plus, let me just do this, and crossing a 9 EMA. Right? So we have over here on the crypto side of things, it's 3% plus, whoa, and 9 EMA again. Right? I like to use that. That's going to happen anyway. The 9 EMA is kind of obsolete, but it just kind of tells you that with a crossing, we're starting to move into a more bearish market for bullish. That's something different, but we've always just had this on here. It's more about the distance covered. The larger the distance, the more volume, the more volatility, more people hopping into the market as a result of both of those things. So if it stops, again, it's going to be a major area for, again, if there is nothing else around it, like this one, I will chuck my stop loss underneath it because I know it is a major area. It's not come back to here, so my stop loss would probably hop up under here. This is a great trade that we took the other day. It was a nice 1 to 4, came up, and you can see that I chucked my stop loss underneath this area. Why was this really good? We actually had 2 other areas around here, but again, major area, major high, major low, it comes back to these areas. Oh, we start to understand. And then what we do, if we find out this area, is take it a step further. Well, if it needs to be like this, what we can tell is clearly we've got a high here. We have a high because it's moved 15 or 3% in this case, all the way up to here. But do we have a major low? Well, from here to here, it's 2.81. Therefore, there's no major low. Gets tricky because from here, the lowest point, all the way up to here, is 3.29. So we've got another major high. 2 highs, no low. I don't like that. I don't prescribe to it. I always believe that you need, in order to find another major high, you need another major low. High, low, high, low, high, low, because I want to follow a trend. If there is no low in between a massive area such as this, I will say, here's your low, here's your high. Irrespective of what's happened in here. Even if from this area to here, it is over 3%. In order to find the next high, you must have a low in the middle. So technically, even though this looks so weird, that there is your major high. Of course, at the time, I know it's going to be somewhere around here. But until I have another low, I have to keep on saying, okay, it hasn't been formed yet, it hasn't been formed yet. This point now is clearly higher than this one. Wait until it forms a major low. So from here to here, we have a major low. Now this one has been solidified and formed. Yes, we have a low right here, but it hasn't been solidified and formed until we get it coming back up to a 3% here. Once that has happened and it has hit this rule here, I can say we now have a major low. But this could come up, it could do so many different things. It could come up to here, come up and then get nearly close to it, and then fall all the way down. In which case I'd say, no, there's no low here. The low is somewhere around here. Until it then, of course, moves 3% up. And I go, yep, there we go. You want to be 100% certain that that is where it is. If you have a mountain, if you've ever been climbing one, and you go up and up and up towards the peak, and you can't see this one because this is so high up, and you get there and you go, oh, it's a false peak. It's a false peak. There's still more of the mountain. Are you going to say that that's the top of the mountain, or are you going to say that that is the top of the mountain there? Well, this part is, isn't it? And you only know that's the top of the mountain because once you get up there, you've got this huge valley. It doesn't go any higher. But if you don't have a valley, oh, and it's just like this, well, what the heck is it? You only know it's the top once you get to the top and you see that all the way down there's no other highest point. And until that is solidified in your mind, you have not reached the top of the mountain. It's just really, really simple, guys. It is dead simple. You do not have a top until you have a low. You do not have a low until you have another top. You do not have a top until you have another low, and so on and so forth. These are the benefits and highs and lows. This is how you look at them. It is a confusing topic. You do need to have lessons on this. But if you get your head around it, it can really help basically any strategy ever that you've hopped into. So, alright guys, you have a good one. I will speak to you later. Bye.